Hello and welcome to another update video about gold. We take a look at the gold chart today on the 4-hour time frame. Before we really start, I have to say the structure that gold puts in place here at the moment is really ugly and also extremely difficult to read. We are really at a key junction here, a really important decision point at the moment for gold. So I'm going to tell you the different scenarios we have, and I'm going to tell you which price levels need to hold or need to get broken to make each of these scenarios more likely. So we start with the first scenario basically. It is the scenario of a proper impulse which was basically completed here. The idea is that we, from the low here at around 1620, we moved up in a wave 1, came down in a 2, had a nice long trade area here. I mean, all of this was a long area, but we moved up in a wave 3, then came down in a wave 4, and we have now moved up in a wave 5. So this would be one wave complete, or wave 1 complete, impulsive wave complete, and we would now move down. How can we tell that this scenario is happening? First of all, it would be a bullish scenario because we've completed 5 waves to the upside. What I don't like is this move or this structure up here. I absolutely don't like it, because if I look at the subwaves, and by the way, let me just change here the wave degree. I think I need to change the degree. Let me just do that. So if I look at the subwaves for this structure to the upside, I can count 5 waves, but it's not ideal. And I don't like the structure. And having a good look is extremely important in Elliott wave. So we could count this as a 1, 2. Yeah, and we had here possibly the 3, the 4, and this would have to be the 5. So a very short wave, basically, yeah. Very short wave 5. And yeah, it's not ideal. Based on this wave count, we would have now started the wave 2, and this wave 2 target area would be located between 1663 and 1720. So it's basically based on the Fibonacci retracement levels of this wave 1 to the upside between the 50% retracement and the 78.6% retracement. If we drop below the 78.6 level, the bear mode gets switched on, We have to talk about a direct sell-off and maybe another low. But we are far away from that at the moment. Just be aware that the next larger retracement, maybe it starts now, maybe later, and we take a look at that now. But if it starts now, this will be the stress test for the bullish case, okay? And I mean, by all means, we could already be in this wave 2. We could have done here, and that's absolutely possible. Could have done here an A wave. This could be a B wave, which could be done now or very shortly, and then we can come down in a wave C to complete wave 2. So this is the first scenario, but I don't like the length of this yellow wave 4. Okay, but if we look at the Fibonacci retracements just for this yellow wave 4, so to zoom in a little bit, we can see it's possible, It basically reached here the 23.6% Fib level, and that's a perfect target for a wave 4. Okay, the other option, and that is also possible, is that the wave 4 wasn't here at 1790, but here at 1780. And that would mean that we might get a little bit of a better wave 5, a little bit more of a push to the upside. That's basically the second scenario here. This would be possible, barely possible, because the wave 4 reached the 50% retracement. That is also an area that makes a wave 4 possible. So the wave 4 normally retraces into the region between the 23.6 and the 50% Fib level. And it just turned around here at the 50% level. So that also means if we drop below the swing low of the wave 4, and I'm going to highlight that as a key support area, This is working support now. If we drop below that 1778, 1779 level, it would include, or it would make very likely that we come down straight away and that we had this scenario. Yeah. But as long as we hold above 1779, we can push higher once more in this yellow wave 5. I hope that was clear. I can give you a target for the wave 5 as well. Let's say the ideal target. For that, we take the length of the wave 1 and we add it to the low of the wave 4. And, well, a key target would be here. I mean, we've got the 1-to-1 ratio, but that is basically the previous high. So the ideal target here would be 1851, the 1.618 extension. So yeah, you can see it's a tough market to read at the moment. It's a tough market to read. And these are basically the two key scenarios. There's one more scenario. It doesn't make a great difference. It's a different chart, but it doesn't make a great difference. It would mean that this other possibility is that a wave 1 was here. And that we've done basically, let me think. Yeah, then we would say that we're actually in a larger ABC pattern. So this was a wave A down. Works out quite well. Then we would have to say an overshooting wave B, and then we come down in C. To be honest, it is not much different, because it would also mean we are in a wave 2, and the target would be quite similar. It would shift the target slightly down, but it would also mean we are in a wave 2. So it would be very similar to the scenario where I say that the wave 1 was here, and we started the sell-off. It just means the subwave structure will be a little bit different, and it would mean that we're already in a wave C down in 1, 2, 3, 4, 5. But just want to highlight it so that you know this is possible as well. But I didn't want to confuse you, so I don't want to go into too much detail. Basically, I think it's all about we're either coming down directly, and that will become much more likely below 1779, or we'll get one more high and then come down. Yeah. Okay, and that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out the channel membership. Thanks a lot for watching. Bye-bye.